All right. Good morning, everyone. Thank you so much for joining. Today is April 8th, 2023, and this meeting is for our LJ agents. And I do appreciate you guys joining us and even watching the recorded ones. And today's agenda is going to be we want to go over the market, we want to go over RPR to run our reports. We're going to go through some auction properties, how we find them, and even some of the property that you guys show in Long Island, the taxes are really high. So there are some ways to reduce them. We'll go over that. And we'll go over one bank statement loan option. So when you're qualifying for a loan, you can do a traditional way of going through, following the guidelines for Fannie Mae, the government basically, through getting a FHA loan, a conventional loan, traditional conforming loans, which are called QM, right? These are qualified mortgages, but there are also non-qualified mortgages where simply you just need to provide your bank statements and you can get qualification from there. So we'll go over in details for that, right? So let's get started with the interest rates. And this is according to Freddie Mac, and this is from April 6th, 2 days ago. And this is for 30 years conforming conventional loans, and the averages were 6.28. And according to our mortgage news daily, for the same specs, you're looking at 6.34, which is very similar to what Freddie has here, right? So the trend here is always on the lower end. We were seeing on the higher end, now it's going lower. But compared to last week's meeting from Wednesday to now, it did go up a little bit higher, but it's still in the same range, right? And in the news now, right? This was from National Mortgage Professional for 30-year mortgage rates falls for the fourth straight week, right? Again, exactly what we're talking about. And this is what they have the snapshot of exactly what I just showed you live, 6.28. So when you're having a conversation with the clients, you can tell them, hey, sure. Oh, wow. Thank you for that. 1 second. It's good. All right, perfect. So let's run it back real quick. It's going to take a second for Freddie Mac, 6.28 for 30-year conforming conventional loans. And from our Mortgage News Daily, 6.34, very similar to what we see on the other side. And this news article is exactly what we showed you guys there. They're showing at 6.28. So interest rates right now, they're decent. They're not on the craziest highest level. At the same time, they are high compared to when we look at our 3 points, 4 points. That's not going to happen anytime soon, but still reasonable to what we were seeing before. And you can see the graph on the bottom here. We were on the higher end and it did go down and then, around 6 right now. So when you're having a conversation with your clients, you want to tell them, hey, the interest rates change every single day. If you're in the market, let's show you the properties. And obviously you want to show it to the clients that's actually qualify, and just tell them, hey, you're because there's less buyers out there, you value more to those sellers. So put in your offers. This is the right time to buy if you qualify, right? But it really depends on them and their situation. But the news are all over the place, and that's why I try to pick different news outlets so you guys can see a full picture. And this one is from MPA, and this one is showing that U.S. mortgage rates keeps falling, sending homebuyers into frenzy. Right? Again, when interest rates goes down, there's more buyers out there that qualify. Right? And this is according to the mortgage note. Mortgage rates declined again, but the buyers are still hesitant. Again, buyers are confused because when interest rates changes so much, they get they're like, I don't know if I should buy the house right now or not. But you as a realtor, we're following this on weekly basis. You're the one who should be advising them if they should buy or not, right? Especially when it comes to the offers. Another issue that homeowners go through is the property taxes, right? They can love the property itself, but the property taxes will be a deal breaker for them. right? Even some of these guys, maybe one or two family members love the property. They put an offer, they buy the property, and then a year later they can't even keep up with their payments, right? And who they're gonna blame? They will obviously go to the blame the realtor as well, because they didn't advise them. The loan officer is another one person to blame as well. Hey, you guys didn't advise it. So that's why we always say what you qualify for is not what you should max out on, right? So if you qualify for $500,000, you should be purchasing a property less than that. So you have at least wiggle room for these property taxes or home insurance or any other expenses that come with the property, right? For the repairs and all that. So you want to advise them, hey, don't max out on what you qualify for. Okay. So because property taxes can take these properties to foreclosures. So let's say the buyers actually or the homeowners actually, making payments, but they can't keep up with their property taxes. The property taxes has the number one lien on that property, right? Even it comes before the mortgage itself. So because the city and the state wants to get paid before anyone else, property taxes matter a lot. So just make sure that they are going in within their budget, right? So this was a nice chart here for home ownership, right? And this is going back 5 years. And this chart will show that back in 2018, the home ownership was around 64%, and it's been hovering around 60s, right? But in 2020, yeah, in July of 2020, went all the way up to close to 68%, right? The reason for this is that if you look at the chart below this, the interest rates were at 3.24. So today we're talking about 6.28. Back in 2020, they were at 3.24. And obviously, it will encourage most people to buy, and that's what happened. And the home ownership went up to 67.9. And as of 2022, it's at 66%. Okay. And these are the homeowners that are occupied with their property. So they're actually living in those properties in the whole America here, and it's around 66%. Okay. The rest of it is rented out. So you own a property and you rent that out. Okay. Any questions, concerns on your mind, guys? All right. Next, let's look at our community report. And today we want to focus on Nassau, Long Island, and see what are the specs for that. So all these numbers that you're seeing are in thousands. So there's a population in Nassau for around 1.4 million people living there. And with the gender difference is about 50-50 men, 50% women. And the homeowners, this is what we want to focus on. These are the first time homeowners. And, their ages between 27 and 35. And these are the people that you want to target, right? Because these are the people that actually will be looking for advice to purchase their first time home buyers. And you want to give them the advice based on your knowledge and being a realtor. And always be on their side. Always see what's the best for your client, right? When it comes to the property itself, when it comes to the mortgages, even our loan officer, we always try to tell them, hey, do the right thing all the time. So this way you can get referrals. This way you feel good about yourself too, that you're treating these clients with all this they're relying on you. And now if you guys give them the right advice, it will go a long, long way for you guys. Okay. Birth rates, just like how we saw in Queens last time, they are trending downwards. People are having less babies. All right. Like according to Elon Musk, that might be a problem. So education wise, right? um, Most of the people that you see there in enrollment are in college there, so which is a good thing, right? So they're coming out of college, uh, they want to purchase their first time, they're going to be a home buyer. Again, you want to target those clients as well. The properties, right, that are built, these are by the decades, right? There was a lot of properties were built in 1950s, and that's what we see right now when we go as a realtors. Majority of the properties that we see, they are old, right, but they are renovated. So the investor that bought the property, purchased it, put in maybe X amount of money on it, 50, $60,000, renovated it, right, and then put it back on the market. So those are the clients that's that's the majority of the clients, right? There are a few clients that are looking to get a land or look for a beat up property, knock it down completely, and then rebuild it. Those are happening a lot less. So in 2000s, you're only seeing around 13,000 properties there. Okay. And for crime rate, it's not too bad in Nassau. You can see for violent, it's less than 1% there. Okay. And we always want to be careful, guys, as realtors. We do not want to steer our clients to one neighborhood compared to the other ones, right? They have to decide that which neighborhood they want to be in, depending on their job or their schools or whatever their scenario might be. Do not tell them, hey, let's go to this one. This one is a better neighborhood, or don't go here. This is a bad neighborhood. You can obviously advise them through RPR, which we are going to go over, but we just can't steer anyone to any direction. Okay, so just be careful on that note, please. Okay, any questions concerned about Nassau, guys? All right. So next we want to talk about RPR, right? This is a tool that you get with your One Key membership. So this is a membership that you're already paying for. So why not use this to create reports to find out comps, right, for the properties? So when it comes to comparing any properties or you're about to put in an offer, GeoData is great. GeoData gets the job done in 1 second. You just type in the address, you get all the details. But One Key, you have to do a couple of steps, but they're worth it. So, and you could do residential and commercial. So if you do residential here, you can say, let's type in the address. You'll see the address up there. If it's an active listing, you will see the details from there too. It's listed for 1.3 million, and their estimated average is showing that on the lower end it will be around 944, and on the higher end 1.28, right? So it really depends on the property's condition itself. So we know this property was knocked down from single family, built into a two family now, 3 over 3 bedrooms, and the that's why it's listed for 1.3, right? And when you're seeing the price ranges like this, you can start your offer at this price and see what the listing agent tells you if you have to go higher or not, right? But this is just typing in the address, you're getting all this information here. If you want to do CMA, you want to do actual comps for this property, you can click on CMA here and actually follow this through with the confirming the facts, picking out properties, and it will give you about 5 or 10 or 15 or 20 pages report with your photo on it, and it makes you look really professional when you guys are sending that out to your clients, right? Again, you don't have to do this every time, but if your client is really curious about every each listing that's available or sold, CMA is the right way of going through this. Okay. If you scroll on the bottom here, you can see some pricing tools here: list price, their averages, and then you can do your CMA reports here. You can even do a net sheet for our sellers. This net sheet is fine, but the one that we have here on ljagent.com, it gets the job done every single time. Under forms, sellers takeaway breakdown, right? So if you have a listing, if you have any listing, this is any seller that you talk to, this should be filled out. This way you're giving them a full breakdown of how much they're gonna take home after or at the closing, right? So that goes a long way. But before that, go to RPR, check out the specs from there, right? And if you scroll on the bottom now, you can even see more legal description for the property, the schools, owner's facts, right? If it's in a flood zone or not. And you can see all the listing history. You can see that when was it on the market, when was it on hold, when it went back under contract, when it came back on the market, if there was any price change, right? So all of that can be done here. And then you can see the public record history as well, right? When was this property bought in 2018? How much was it bought for? And stuff like that. if you click on tax now, this is very important here. So when you are confirming the taxes on GeoData, which is great, you want to confirm it here as well. See what are the taxes showing for 2021, 2022, and stuff like that. The latest one should be the first one here. Okay. So there's more information here, even estimated value. You can see that the value has been increasing. The more, this was when it was a single family, and this is when it was a two family, right? So the point of this RPR is that when you have an address, it's a free service. It's not free because you're already paying for MLS is included with your membership. So why not use it? GeoData and RPR, if you have both of them together, and then you talk to your client, you can be, you can share these screenshots with them. So, they know, they trust you know what you are actually talking about. Okay, so that's your RPR. If you guys need any help setting this account up, if you or any assistant with RPR, just schedule a meeting with me and we'll go through that. Okay. Some of you guys are getting into auctions, right? Property Shark is great, and you guys want to probably even properties on MLS. Sometimes you see in the description, hey, properties available at $300,000, but then on the remarks it says, hey, it's going on auction on auction.com on April 12th at 3 p.m., right? So they're just saying that, hey, this is our starting bid. And that's why a lot of clients will call you too. Hey, I see this on the market. It's listed for $300,000. I want to buy it. I'm willing to pay 350 when you know that the property is valued at like 600,000, right? It's just for them to tell you guys that, hey, this is the auction starting point. So when you guys see that, you want to go to auction.com. Auction.com has the properties that's going on auction in our Nassau area, even in our Queens area too, right? So just going to auction.com, typing in the county, you will see all the property that's coming on the market, right? So the next auction is coming is on April 11th, 3:30 p.m. And the estimated resale value is $800,000 for this property, right? And the opening bid is 148. So there's a good chance that if you guys see this property on MLS, it might say, hey, it's listed for $148, but we know that it's not gonna be sold for 148. On top of that, auctions properties usually do not come vacant. If you see a property that's vacant, there's gonna be a lot of other investors that's gonna be all over that property too. That's one of the best or one of the pros that you can get from these auction properties if they are delivered vacant, right? If not, then you have to go through the whole process of getting them out, which will cost you money and time, right? So this property here, you want to click on it, and we're going to see it says active, cleared for auction, right? And this is what you see, that the bidding starting at 148, estimated debt is 226. In most cases, what I usually see is whatever the debt is, that's usually the starting point. But for some reason, for this property, they listed for 148. But trust me, you guys keep an eye on this property too, that when it's sold, it will go over $400,000. That's what I'm expecting, right? So again, this is in Baldwin. Estimated value could be 800,000. Let's just say on a bad day, $700,000. Still not bad, right? And the way it works, you are a realtor, right? So you're going to create an account on auction.com and you're going to tell your buyer, hey, I have the tools and I can bid for you, right? You tell me what's your maximum number. For this property, hey, I don't want to go above 385. That's the number they give you. That's the number you put in here. But you don't actually put in 385 from the beginning. You play that game of bidding, right? Bid 5,000, 10,000, whatever the increments they are showing. Sometimes you have to go up 10,000, 20,000 at a time, and you do that. And once you hit that limit for your buyer, 385, and if you're outbid, you don't worry about it. But if you get that auction, you will get a percentage out of that. It's usually 2%, 3%. It will be listed for each property on there. So the point of this is that you guys have access to auction.com. You guys create an account on auction.com and start looking for properties. And if you see a property, you guys can send me the link. I can review it and guide you guys as well if needed. right? So guys, please pay attention to auction.com for these properties. Any questions on this, guys? All right. Yeah, just auction.com. Yeah, I'll share that link with you guys. Yeah, I believe so. I believe they have their app as well, but they're online on browser, even on, even if you're on your phone, and if you go to Google Chrome or Safari on your iPhone and just go to auction.com, you'll have access to all that too. Okay. Yeah. All right. Anyone else? All right. So next is the Property Shark itself. So we are starting to provide these lists to you guys in our WhatsApp group and in Microsoft Teams. So foreclosures, NASA foreclosures, right? So these are not only on auction.com, these are happening in the court as well. And once you guys start going to the court, right, you guys will see a team of auction.com people there as well. So, these are the same people that you see on the back end on auction.com. They're in the courts just to settle you know, these properties. So for Nassau here, if I type in next 90 days here, the next one is coming on April 10th at 2 o'clock. And you see that is going to be on the steps of Supreme Court, right? This is in Nassau. And the start, there's a lien for $677,000. Again, any property that you guys see here, when the lien is this much, you guys want to do the comps beforehand. You only want to bid if there's money to be made. You're not going to bid on something that you're not going to make any money or get your client stuck. You always want to make sure, and it's not like an overnight thing that, hey, this is perfect for me. It's not. It's going to be like every property is going to have pros and cons, and when there's enough pros in that property, you take action on that. Okay. But just know, guys, you guys have access to this, and you guys have, um, basically, if you have a client that's an investor, you don't want to say no to them. Get the information, tell me what their requirements are, and then we'll guide you guys. Okay. All right. So we spoke about this earlier for the taxes, especially for our Nassau clients. Some of the properties are very beautiful. They're huge made, it's very spacious, but the taxes are $18,000, $22,000, $28,000, and those are not reasonable, right? So, but if your client really likes the property and their taxes are high, one option is to reduce those taxes by putting in a request to Nassau County. Not every property will get their taxes reduced, but you can try it, right? So there's two different steps. One, either you can do it on your own, or you can hire a company. If you want to do it on your own, you follow these steps, right? You're basically filling out their forms and you filing it online, right? You are not required to have an attorney, right? But if you do, that's fine too. But it should be only one person doing it. Either you're doing it for yourself or you hire a company to do this, right? If you want to hire a company, we'll share this as well with you guys. It's called Heller Tax Grievement, right? And they have been in business since 2007, right? And you don't pay anything upfront to them. So if they help you reduce the taxes, they'll charge you 50% of the first year's saving, right? But anything second year, third year, you still benefit, but the first year, 50% will go to them, right? And they work with the experts. They know their stuff inside out. They'll help you, but then again, you don't have to use them. If you want to try on your own, that's perfectly fine. If not, then you have a company that does that paperwork for you and try to get it reduced. um, Again, you don't want to tell all your clients that, hey, we have a company that you can reduce your taxes, and because you want to get the deal done. You don't want that. This is for clients that already have a property, or if they're telling you, hey, my taxes are too high, is there any way to get it reduced? Yes, there's a way through tax grievance in Nassau, right? Questions, concerns, guys? So for the newly built properties, right, that's probably a property that was knocked down, brand new property, you don't see the new taxes right away, right? The architect might be able to give them an estimate, right? Because by doing the comps and how many square feet the new property is going to be built, but nobody knows what the new taxes really going to be. So if you show them a nice property and the taxes are like 16, $17,000 right now, and they're planning to knock it down, build even a bigger property, advise them, the bigger the property, the more taxes you have to pay. Okay. Again, you guys are the realtors, you guys are the experts. They're relying on you for advice. When you guys are advising on that, it has to be correct. Okay. And this company has pretty nice reviews as well on Google, right? Look, this is 9 days ago, 26 ago, a month ago. So this is pretty positive. Okay. Any questions, concerns, guys? All right. So next, we want to look at our KV core, right? Some of you guys were complaining that when I go to listings here and I type in our zip code here, right, and the search, and I'm not seeing all the property that's available in this zip code, right? The last property is showing is from April 3rd, and prior to that is showing for March 26th, right? But you don't want to just type in the zip code here. You don't want to do that. So once you go to the listing, you want to click on apply filter. Once you hit apply filter, then where it says location, type in the same zip code that you guys were interested in. A drop down comes, it says zip 11420, and now you can hit apply. Okay. Now look at it. Now we see the first listing that our agent here, Mr. Ansari Ali, he listed. We were not seeing this earlier when we just typing it in here. So it's very important that we click on listings, filter, actually put in the zip code and apply filter. And then you'll see all the listings. This is from yesterday, the day before. So plenty more than just typing it in here. Okay. Simple enough, but it can be confusing because it's very tempting just to type in the zip code right top here, right? So apply filters, zip here. Okay, let's do maybe 11418 and see what's on the market. If you just type in the zip code, it will give you your rentals, it will give you your for sale, everything. If you guys want to narrow it down even more, you can do that. If you're just looking for 3 bedrooms, 2 baths, apply, and then you can see those properties as well. So again, this is not for any clients, this is for yourself. Any property that you guys want to take a look at, listings, and then filters. Okay. All right. Next, we want to talk about commercial properties. We had an agent whose client is looking for a gas station, right? So if they're looking for a gas station, you can go to loopnet.com, right? So instead of clicking just for sale, you want to click on businesses for sale. And then you can even type in what they're looking for. This person was looking for gas station around Nassau, and we're gonna hit search, right? Some gas stations will be, or some businesses here will be just the gas station itself, not the property. Some of them will be with the property. So the first one that we see here is gonna be a new construction gas station with a convenience store, and it's gonna be with property. So it's listed for $4.5 million, right? Or it can be a gas station that's listed for $500,000 and it's on a lease. It has a 20-year lease on it. Again, depending on your client's budget, their needs, we have access to both of them, right? If they tell you, hey, we're just looking to lease, fine, we have those too. If you're looking with the property, we have that option as well. Okay. Again, it's in LoopNet, typing in your county where you want to be in. Okay. Any questions, guys? All right. Again, real briefly, on your website on ljrealtyteam.net, on sell, we mentioned that on the last meeting that property values are showing much better than before, right on your website, right? And it will give you whatever you, if you were to log into Atom, right, or Geodata, this is exactly the middle value will show on your website now. Makes your look a website look more even powerful, and it's already built in. No steps needs to be taken as long as they take click on sell. तो ही call कर लेना. Okay, so 15 minutes. 15. Okay. Okay. All right, guys. Next, which will be our last topic, is going to be our bank statement loans, right? So when a client is looking for mortgages, right, we just want you to be educated enough that there are options available. Not everyone should get those, but just that options are available. They could be a self-employed person, right, that owns a business, but when the taxes time come every year, he or she is putting in so many extra expenses or whatever expenses in order to reduce their taxes, right? But now that same person wants to buy a property, right? And we're looking at, if they just want to get a regular mortgage through following the guidelines, right, then we would need their w2s, or they need 1099s, and we need to see those. But there's a program that will only ask for their bank statements, right? So we know how much money that's coming in. The underwriters will review it and see how much they qualify based on the income that they're making. Because they know these banks know that, hey, when the taxes come, especially self employed, they're not putting the full amount there. They're trying to pay less taxes, so they're putting more expenses there, right? So let's talk about that. These non-QM, so these are non-conforming, these are non qualified mortgages options for self-employed and individuals that have high net worth as well, right? But they're not able to get their loan because they don't document their income, right? Some lenders will ask for 12 months. Some lenders will ask for 24 months, right, for their personal and business bank statements. Some lenders will go as low as 599 or 600 FICO, but with that will be higher interest rate compared to if you have 680 and above. So we always recommend that you have at least 680 if you want to go towards these bank statement loans, right? And these loans can go up to $4 million if needed, but majority of them we see are, typical two-family property that needs a loan for 800,000, $900,000 max, right? But they can go up to 4 million. It could be 30 years, 40 years. Again, we want to keep it simple with 30-year fixed rate mortgages. And even if you had a bankruptcy from 12 months or foreclosure, you still can qualify depending on your lender. Some lenders will have more restrictions than others. Okay. Condos, co-ops, you can do those as well, right? And some of them you can put lowest 10%, but majority of them will ask for 20 or 25%. Okay. For 3 months reserves as well. Some lenders will ask for even more than that, right? That they want to see that, hey, whatever monthly payment that you have to make, you have at least 3 months of those reserves separate from your down payment. So this way they know that if you lose your job or whatever case might be, you have enough funds to make those payments, right? So what is the difference between a bank statement loan and a traditional loan? Simple is that the qualification, that your applicant's qualification is based on their bank statements rather than their tax returns, right? How long must a borrower be in business to qualify for these bank statements? Some lenders will ask for 24, which is 2 years. Some of them will ask for 3, some of them even more. So it will be depending on your lender. And you probably need a CPA letter confirming your self-employment as well, right? And co-signers, right? There is a difference between co-signer and a co-borrower. If it's a co-borrower, that person will be living in that property. If it's a co-signer, he or she might not be living on that property, right? But you cannot add co-signers to these bank statement loans who are not going to occupy that new property. Okay. Again, this will vary lender from lender, right? And we spoke about this earlier. If can get bank statement loans, if you have a foreclosures, some of them will go at least 3 months. Some of them will want at least a year. Some of them will want even more than that. But it is possible if you went through a bankruptcy or foreclosure or short sale to purchase another property through a bank statement loan, right? And the last four, can you use any crypto, right? You want to add crypto from your cryptocurrency to bank statement loans? You cannot, right? This has to be your income that your business is producing on the regular basis. Okay. Any questions, concerns, guys? Okay. I will be start recording and then we'll go through any questions.